This is Haystack Help Radio on KLZ 560. Haystack Help Radio is powered by HaystackHelp.com. Finding help can be like finding a needle in a haystack. But with HaystackHelp.com, finding the needle just got easier. Now, Haystack Help Radio with Scott Watley on KLZ 560.
And welcome everybody to Haystack Help Radio. And of course, that voice you're hearing is not Scott Watley. I am Dan Meurer, co-host of Rush to Reason, and you can hear me and John Rush every weekday afternoon from 3 to 7 right here on KLZ 560. It's always my honor to fill in for Scott, especially when we have this gentleman on, Paul LoNigro. He is the owner of Group Insurance Analysts, or GIA. And Paul, welcome back to Haystack. How you doing?
Yeah, good. Glad to be on. And where is Scott, by the way?
Well, you know, he's out doing very, very important business.
Oh, really?
Uh-huh. Only the kind of very, very important business that Scott does.
Oh, okay. I got it.
Yeah, it has something to do with Texas, guns, and hogs.
Okay, so it sounds like he's out there hunting again.
No, not the sportsman of Colorado. He wouldn't be out there doing that. So while the rest of us, here slaving away and working, Scott is out having a really good time.
Well, I'm glad to hear that, and I'm certainly happy to have you in today filling in for Scott.
Well, thank you, sir. And one more thing about Scott, he has to go do this stuff because he is the sportsman of Colorado.
Well, that's true.
So, you can't do a sportsman show like his without actually going out and doing some hunting and stuff like that. So it's all work related.
So he's doing hands-on research.
Exactly. You're exactly right. So, and who knows, maybe someday, Paul, he'll invite you and I to go do some hands-on research.
Well, that would be nice, but in the interim, I did tell him to bring us back some bacon or sausage.
Ooh, you're the man. Good plan. I'm glad you did that. I'm really glad you did that. Hey, so, okay, Paul. So every time you and I are on, we talk usually about one thing, and that is how Obamacare has totally destroyed the health insurance markets, and the Affordable Care Act is anything but affordable. But before we get into that, why don't you go ahead and tell the listening audience more about GIA and all the other services and insurance options that you guys provide?
Sure, and you know how much I love talking about Obamacare as well.
It's going to be a fun hour.
We are independent brokers, and as independent brokers, we have the ability to shop insurance with many different insurance companies. Okay, now there's a lot of agents out there that work for an insurance company, and they just quote that one insurance company, and there's nothing wrong with that. We're different in that we get to go out and shop rates, benefits, plans, policies with many different companies, and most people when they understand that really like that. So we are independent brokers. We handle all lines of insurance, whether it's health, Obamacare, home, auto, business, Medicare, you name it. If it's something that can be insured, we can find a market for that insurance. And also we are based in Colorado, where we are a Colorado company. We're in Wheat Ridge at 44th and Garrison Street. We actually have an office location, so people can come in and visit, and a lot of people do. And we've been in business now about 35 years.
Wow, that's a long time. Now, because you're an independent broker, I'm sure you charge a lot more for insurance than by going to just straight to the company.
Well, I'm glad you brought that up because although many people understand how we work, there's a lot of people out there that believe that it costs more to get their insurance through an independent broker, or that we're going to charge them a fee. We do not charge anyone a fee. We work off of the commission that the insurance companies pay, and the rates that you get are the same rates as if you go directly to the insurance company. So if you're buying your Obamacare plan, and I know how much you like to do this, but if you go and buy that Obamacare plan on your own through Connect for Health or directly through the insurance company, you're going to pay the same exact premium as if you buy it through us. So there's no difference in premium.
And I'll tell you what, the support that you guys provide, it's worth every extra penny that I don't pay. And what I'm
Right.
trying to say by that is that I have tried. You know, I wanted to save Austin. Austin is my guy over there with you guys. I what do you call him, broker? And so he's my guy. And a couple of times I've tried to save Austin the brain damage of having to deal with Connect for Colorado, or even my insurance provider's Bright Health. And no, don't. I mean, I'm telling you what, Austin takes all the work out of it. I've tried. I get absolutely nowhere. I get him involved, and it becomes a manageable process, where otherwise it's a flipping nightmare to try to go do this kind of stuff on your own.
And if you try to do it on your own, more often than not, you wind up doing something that kind of messes it up without even knowing that you did it.
You think? Sorry.
Yeah.
Because that's exactly what I did. I find, Austin, I'm sorry. As a matter of fact, I need to send him something. Right? Probably something, stiff. Something, 100 proof or something. But I'm just saying, yeah, no, I did exactly that. And luckily, Austin was able to, to bail me out.
I asked Austin, I said, was there any reason why you put Dan with a company named Bright? And he said, I'm going to take the fifth on that.
No, there's a good reason.
I'm just teasing.
No, there's a really good reason, Paul. There's no question about that. But hey, in all seriousness, you guys, and this thing has become so complicated since the so-called Affordable Care Act, or Obamacare, that you guys really have taken as much of the brain damage out of this thing as anybody possibly can. For me, the user or the customer.
The ironic part about this is if anyone remembers the debate going on in 2009 when this was going through Congress, the whole idea was to make shopping for health insurance really simple, to make it as easy as going on Amazon and point, click, and enroll. And could anything be further from the truth than what actually happened?
No, it's 180 degrees from that. It has taken something that, quite frankly, was relatively easy to manage and deal with into something so complicated that if you don't have, GIA, a Paul or an Austin or somebody helping you out, like I said, you're going to screw things up, or you're going to end up not even knowing what's going on. And there's a good chance you could show up to your doctor one day and they go, well, you know what, you're no longer in the system. You're no longer. We don't even show you with your old insurance provider.
Yeah, that happens all the time, and we kind of knew this was going to happen because number one, the government's involved, and when the government's involved, we know to plan for the worst, and second, we were looking at Medicare, and after the changes made to Medicare in 2005. We saw how much difficulty seniors had in navigating that new Medicare system. So we kind of figured it was not going to be that easy, and in fact, it has not been. And besides the premiums going up, besides the networks getting narrow, besides the number of insurance companies diminishing, besides the premium skyrocketing, we now have the issue with the doctors and how many doctors don't accept any of these Obamacare plans. So this market has really changed dramatically in the last 4 or 5 years, and really not for the good.
No. Okay. So let's go all the way back. Let's go all the way back in time to like 2009. And you can speak in generalities, because I just want to paint a picture. How many insurance providers were available in Colorado before the Affordable Care Act or Obamacare?
Well, there was probably more than a dozen insurance companies to pick from, probably more than 20 for individual health plans, which was kind of similar in Colorado to what happened on the small group market back in 1994 when Colorado enacted insurance reforms for small group. At that time, we had 20, 30 or more insurance companies selling small group health plans in Colorado. Then we put these reforms in, kind of similar to Obamacare reforms, where we instigated mandates and requirements and so forth. And within 5 years, we were down to 5 insurance companies. So then Obamacare came about on the individual side, and we were looking at it and talking about it on the show back in 2010, 2011. and saying, yeah, what we're going to see is we're going to see not only rates go up, we're going to see a number of insurance companies go down. And sure enough, we're down to a handful right now. And it would not surprise me if in the next few years we lose a few more and we're down to 2, 3, maybe 4 companies.
Yeah,
that is
no, in that once okay, because the left is they claim to be all about choice, but that really limits your choice to black or white. Which one do you want? And quite frankly, there really is not going to be any distinguishable options as far as health insurance plans. Am I way off on that?
No, you're right on. In fact, that's why you're seeing some states, and Iowa is one, and Idaho is another, and I think some other states may be mulling this as well. They're trying to pass some state laws that allow insurance companies to sell non-Obamacare type plans. In essence, plans similar to what we were selling before Obamacare. And so now the one in Idaho, the first round did not get through their legislature, but I think they're trying it again. And I think Iowa is getting close to maybe passing something. But then there are people on the left saying, well, that's it's not legal to do that, and the government needs to step in and stop them from doing that. But what they're looking at is maybe going back to where you have some plans that are leaner, maybe don't have all the mandated benefits. Maybe they don't cover abortion. Maybe they don't cover maternity. Maybe they don't cover some of these things that are mandated that you may not want. I'm not sure if they're going to require underwriting or have pre-existing conditions, that in order to qualify. But it's interesting that some of the states now are taking the initiative because they're seeing that nothing's happening in Washington. And yesterday I saw a report on the internet. One of the news agencies put out a report, and it said insurance premiums to rise again for 2019 by double digits. And I said, well, no surprise there. But they put a little note in saying it was due to the fact that Trump had eliminated the individual mandate. Now, I wanted to reach through the computer and strangle somebody. Because that's just, when you talk about fake news, that's fake news.
Okay, explain that.
Because, number one, these rates are going to go up for 2019 double-digit anyway.
Okay.
Whether there's an individual mandate or not, they're going up double digits. Okay? The second thing is that the impact of the mandate was negligible. Okay? There were not hordes of healthy people buying insurance because of the mandate. Okay,
and primarily because it was not a big enough club. Not that I'm advocating for a big club, but that was really the reason.
That's the reason, and in fact, more often than not, people said, "I'll just pay the penalty." Okay, so these people were not buying anyway, and third, the penalty wasn't even enforceable. So if you knew how to adjust your withholdings, you never even paid the penalty, and the IRS had no authority to come after you for that penalty.
Right. So it was all bark and no bite.
Exactly. So to say rates are going to go up double digit because the individual mandate's been eliminated is hogwash.
Okay.
Has no basis in fact.
Okay, I'm totally on board with you on that. So when we get back, I want to talk some more about what has all changed in the market. I've got a question that I got submitted to me because they knew I was going to be on with you about some things going on with their company plan, and then I also want to talk to you about the cost. When we get back, let's talk about how the cost has changed on premium since before Obamacare and to today. So you're listening to Haystack Help Radio. I'm Dan Meurer in for the busy at work Scott Watley on a business trip out hunting. And my guest is Paul LoNigro. He is the owner of GIA, and you can find out more about Paul by going to e-gia.com, or you can always give GIA a call at 303-423-0162. Dan Meurer for Scott Watley. We'll be right back.
Tired of being forgotten, disrespected, and not listened to when applying for a mortgage? Do you always get someone new when checking your loan status? Take AIM, Affordable Interest Mortgage, 720-895-0500. We have been serving Colorado since 2001. We are closing loans in 13 to 15 days. We offer paperless applications, ability to view your loan status 24/7, loans designed to fit your needs, not the bank's, with customized terms, whether purchase or refinance, all at low rates. Take AIM for quick pre-approvals, cash out to pay off high credit card debt, and see how hundreds of our clients are saving thousands in excess interest and payments, all while owning their home faster. Find out how. Call now, 720-895-0500, and talk to your personalized mortgage professional from start to finish. 720-895-0500. That's 720-895-0500, where it is all about you. Regulated by DOR, NMLS 298191, Equal Credit Lender.
Littleton Heating and Air Conditioning is proud of their 45 years of HVAC service to Littleton, Highlands Ranch, and Denver metro area. Littleton Heating and Air Conditioning is your Lennox and Carrier expert heating and air conditioning contractor. They are proud to offer the finest heating, air conditioning, and indoor air quality products with prompt and professional customer service and satisfaction. Call today and mention Haystack Help Radio and save $25 off any repairs or $100 off your furnace installation. Call 303-798-3880. That's 303-798-3880 for your appointment today. Littleton Heating and Air, A-plus members of the Better Business Bureau and official Haystack Help registered company.
Ladies, I know you're tired of walking into the local gun store and seeing the same old thing. So let me tell you about Rampart Firearms. Just a quarter-mile up Highway 67 off of Santa Fe and Sedalia, you will find a great selection of guns, ammo, tactical, and personal defense weapons. And if you or your spouse love to hunt, Rampart Firearms is a great stop for all of your hunting needs. Shotguns, rifles, pistols, anything from predator hunting to your next big game trip. Head to Rampart Firearms at the foot of the Rockies. Open 6 days a week, Monday through Saturday, 10 a.m. to 7 p.m. And you will only pay a 4% tax on your purchase. RampartFirearms.com, 720-468-0050. That's 720-468-0050.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
And welcome back to Haystack Help Radio. Dan Meurer in for Scott Watley. And this is the time of the week where we talk to Paul LoNigro, and he is the owner of Group Insurance Analysts, and that's GIA. And you can find that by going to e-gia.com. 303-423-0162 is the number where you can find Paul and the gang over there. And we're talking health insurance. We're talking about the changes in health insurance since the inception of Obamacare, or the implementation of Obamacare. And so, Paul, we talked about, how many insurance providers were available to Coloradoans, before Obamacare. So on average, let's just say on average, family of four, generally, normal health, it's just really an average number, just for the sake of conversation. What were premiums running before Obamacare?
Well, we would be able to get a family covered, depending on their age, because it was, always it's based on age, but someone maybe in their 30s or 40s with a couple of kids, maybe a policy for $500, $600, $700 a month premium. And back then, and of course, we thought that was high back then. Now we look at that same family and they're paying $1,500 a month, $1,800 a month or more for a plan that has a higher out-of-pocket and a smaller physician network. That's how much it's changed.
Well, it's changed. It's changed a lot, because even with a lot of the subsidies, now let's see, because just about everybody qualifies for a subsidy, you're still paying $500 to $600 a month, and now it's for a plan that doesn't have nearly the types of coverages, the lower deductibles, the riders that they did back then.
Yeah, and the other thing, I think the key is this. With Obamacare, you've got really people in three different situations. You've got people who are on the expansion of Medicaid. Okay, and that's number one. And Medicaid is not to be confused with Medicare. Medicare is the government insurance program for seniors. Medicaid is the program for the poor. Okay, so Obamacare allowed states the option of expanding Medicaid from 100% of the federal poverty level to 133% of the federal poverty level. So Colorado is an expansion, a Medicaid expansion state, and it also allows single people to qualify for Medicaid, which previously they did not. Okay, so Medicaid is one part of Obamacare. And if you look at the statistics, probably somewhere in the 85 to 90% range of all people who have insurance now that did not have insurance prior to Obamacare have it through Medicaid. In fact, one in four people in Colorado are on Medicaid. 25% of the population.
25% of the population is on Medicaid.
Right. So that's one part of Obamacare. Okay. In fact, a lot of people, including myself, look at Obamacare and say, you know what? Even though I disagree with the Medicaid expansion, they could have done that and basically called it good and been done and achieved 90% of the results.
And that's where most of the growth has come from when they're claiming numbers of, more people are insured now than ever before is what they're always claiming. That's really the number they're touting, isn't it?
That is exactly right, but they never mention that. Okay, and the reason is Medicaid's a welfare program.
Right.
And if you expand a welfare program, of course you're going to get results. You're giving away something for free.
Yeah.
Okay. So
no question about it. But the private markets. So when you look at private health insurance, when you look at the Bright Health or the United Health or Denver Health or all those people out there, are their numbers going up or are their numbers going down?
No. Now that's a good question because the second part of Obamacare is the private market for people who are under 400% of the federal poverty level. Because if you're under 400% of the federal poverty level, you qualify for some sort of assistance on your premium. So the government's helping you pay your premium, and the lower your income is above that poverty level, the more subsidy you get. So that's the second part of Obamacare. The third part are those people who get no subsidy. And that's the segment I like to look at, because if you look at the number of people who pay their own premium and they don't get a subsidy and you compare that to 2013, there's less people today paying that premium.
So is that one of the reasons why the premiums keep going up?
That is one of the reasons, because those people tend to be the healthier people. Those are the people whose premium went from $700 a month to $1,800 a month and don't use a lot of health care. Okay, so those are the people who maybe 5 years ago, when their premium went up on renewal, went out and reshopped it with another insurance company. And if they found a lower premium or a better plan that they liked, they would switch. That's what competition does. It allows you to shop and switch, and in essence, it keeps the competitors honest. Okay, now in this market, there really is nowhere to shop on those plans, because the few remaining carriers may not even have their doctor in those networks, and their premiums are all pretty much the same. So there's nowhere for them to go. So they're opting to not buy insurance and pay a penalty or avoid the penalty. Maybe they're going into a MedShare plan, a Christian ministry. Maybe they're buying some sort of mini-med type plan where there's some discounts and some low type benefits thrown in, whatever they are. But they're not choosing to pay that much money for something that they're not using a lot of right now.
Right.
And that's the problem.
No, that's a huge problem. Now because the numbers don't mean a whole lot to me when you say, 133% of the federal poverty level, anybody under that can get the Medicaid, or anybody under 400% of the federal poverty level. What roughly income family of four is 400% of the poverty level?
Well, it's probably going to be about $100,000 a year. If I use a single person, I know a single person making something like $16,000 a year would be on Medicaid. Okay, a single person making about $47,000 a year or below could get some sort of subsidy. If that single person was making $48,000 a year, that they would get zero subsidy. And so the way I look at it, if you're single and you're making $48,000, $50,000, I mean, you're doing okay, but you're not rich.
No,
by no means.
No, you throw in a house payment, a car payment, you're living the lifestyle of a single person making $48,000, $50,000 a year. You're not going to have. And I don't know what's a single person plan run.
And now a single person plan could run $300 a month. It could run $600 a month, depending on their age. And even a family that makes $100,000 a year, family of four, once again, I mean, they're not rich. A family of four at $100,000, and they get no subsidy, and they're going to be paying maybe $1,800 a month premium.
Yeah,
plus they have to pay all their taxes.
No, and it's if your $100,000 a year is right for a family of four, and if that puts them above the 400% of poverty level, I mean, these people are not rich, especially here in Colorado. I mean, you are not living high on the hog at $100,000 a year in a family of four.
No, your mortgage is probably $2,000 a month, and that's probably just for a median type home.
Right.
And then you're paying close to $2,000 a month for your health plan. And then it's probably another couple thousand a month for your taxes, and the rest of it's probably going to cover your food.
Yeah, it doesn't leave much left over, and so
Right.
That's why you're really seeing. And correct me if I'm wrong, but you're really seeing that part of the population, or that part of what you would call the insurance pool, just not participating.
And no one is addressing that. No one's talking about these people. Okay, that they're all, whenever they start talking about making some reforms or changes to Obamacare, they're all worried that people on Medicaid are going to get kicked off, or people who are getting a subsidy are going to get kicked off, and I don't see that happening. What I'd like to see happen is let's get some relief for people who have to pay that whole premium. It's a ridiculous premium for people to be paying. Absolutely ridiculous.
Well, we should almost do what you suggested, and that is let's expand the Medicaid portion of it to capture those that can't get health insurance. But you're also going to reduce those roles if you go back to the system that we had before, because a lot of times the family split. So like part of the family will go on Medicaid, like the kids, and then the other part of the family will go on private health insurance. So if you could get back to the private health insurance market for the entire family, you can pull those kids off of Medicaid and put them back onto your private insurance, if we could go back to a system like we had prior to Obamacare. Or am I way off on that?
No, and the other thing, you're not off base on that. And the other thing they could consider is maybe expanding the tax credits to cover more people that have to pay their full premium. Or maybe at least allow those people to get that tax credit when they file their return, even if they don't get it up front. Allow them to get it on their tax return to help offset some of that premium.
Yeah, but
they're not getting that right now.
Yeah, but as you, Paul, I think we can agree on this too, that the budget can't take much more of this. I mean, eventually we're going to run out of other people's money.
Yes.
And we've got to bring this thing back to a free market-based health insurance, even though it really wasn't even before Obamacare, but it was a lot closer than it is today, back to something to where, I can either through my employer or on my own afford to put my family on health insurance, because you'll be able to increase that pool. Then that should be able to bring down costs, don't you think?
Well, yes, we would certainly have to increase competition again among the various insurance companies, and I think we're going to have to go back to things outside that Obamacare pool, where maybe we can provide those discounts to people if they would answer a health questionnaire, for example. okay, and let the insurance company assess the risk, and I think that would be a good way to get those people discounts, kind of like how we give discounts on auto insurance and home insurance. We don't make everyone pay the same premium. No. Let's go back to that on health insurance.
Well, to me, that's the only logical way to do it. And if you need help with your insurance of any sort, home, auto, health, business, even if you've got a special event coming up, you guys do the insurance for the big prizes, don't you, Paul?
Yes, absolutely. So a hole-in-one in a golf tournament, someone gets a car, we've insured that.
That's so cool. I want to be the guy to get the hole-in-one and the car. And what would be really cool is for you to pay for it.
I just missed it last year.
Oh, did you?
And then I realized I wrote the policy, and I said, wow, what would happen on that?
Oh, that's funny. That's good. Okay, that voice you hear is Paul LoNigro. He is the owner of Group Insurance Analysts, and you can get a hold of Paul by going to e-gia.com, or you can give Paul a call, 303-423-0162. Dan Meurer in for Scott Wiley. We'll be right back.
What could you do with an extra $500, $1,000, or even $1,500 per month? How would that change things for you? Would you buy a new car, pay off bills, or just feel a bit more secure about your retirement? What if I told you there's a way to make your dreams a reality? I'm talking about trading and investing in the market. Now, before you say, oh, that's not for me, just hear me out. I want to invite you to a half-day trading course so you can check this out. I promise you, you'll go away smarter than when you came in. We here at Online Trading Academy sponsor this, and we'll even send you home with a free home study video guide. Your money's doing nothing for you in a CD or mutual fund. Learn how to profit when the market's up or down. Call us now while seats are still available at 303-325-2776. Use offer code Radio50. 303-325-2776. That's 303-325-2776.
Hi, this is Scott Watley. Now, many times you hear your radio host like me say something like, let me tell you about my friends at, then we'll talk about a sponsor that we truly believe in and endorse. Well, in this case, let me tell you about a company that really is part of my family, Lone Tree Veterinary Medical Center. For over 13 years, we have trusted our furry family members to this wonderful staff. At Lone Tree Veterinary Medical Center, they believe that all pets deserve to have a good life. And their goal is to help you keep your pets happy and healthy throughout their life by providing complete pet care services every day, all at one location. We love the Lone Tree Veterinary Medical Center boarding lodge, and your pet will too. Your pet will receive one-on-one care and attention throughout their stay. Open 7 days a week for your convenience. Check them out. Lone Tree Veterinary Medical Center, located at 8681 Lincoln Avenue in Lone Tree. 303-708-8050. 303-708-8050. Or check them out online at lonetreevet.com.
I was hurt in a car accident. The bills were piling up and my insurance company was giving me the runaround. I didn't know what to do, but then I called a lawyer I saw on TV. That lawyer had all the tools and the knowledge to get me $1.2 million.
Whoa. When you're hurt in an accident, you need Kevin Flesh of Flesh Law, a lawyer that's going to take your case seriously and not treat you like some get-rich-quick scheme. Serious car accidents are traumatic and can completely disrupt your life. Kevin Flesh has the integrity to help you get your life back on track. He will fight for you to get what you deserve, but he won't treat you like a lottery ticket. After you've been in an accident, call Kevin Flesh of Flesh Law at 303-806-8886 and make sure you will get someone who will do the right thing and get your life back.
If you're looking for great deals on outdoor equipment and clothing, we've got you covered. Hi, this is Bill Paddock, owner of the Outdoorsman's Attic, your outdoor gear consignment headquarters. You'll save 20, 30, 40, even 50% on previously owned outdoor gear for the fisherman, hunter, and camper. We also sell live bait, firearms, and ammo. If you're doing a little spring cleaning, bring in your gear to the Outdoorsman's Attic. We'll sell it for you and put cash in your pocket. You can also pick up your hunting and fishing licenses right here at the store. Your one-stop shop for all your outdoor gear needs is the Outdoorsman's Attic, located at 2650 West Hampton Avenue in Sheridan, Colorado. 303-781-3626. That's 303-781-3626. Or visit us online at outdoorsmansattic.com. Mention Sportsman's of Colorado and receive 20% off all your outdoor clothing.
Denver's Afternoon Rush. Rush to Reason is coming up at 3. Now, back to Haystack Help Radio.
Alrighty, welcome back to Haystack Help Radio. Dan Meurer in for the Out Getting the Bacon, Scott Watley. And if you don't know me, I am the co-host of Rush to Reason. And you can catch me and John Rush every weekday afternoon from 3 to 7 p.m. right here on KLZ 560. And we're talking insurance with Paul LoNigro, actually getting into this Obamacare and affordable health care and what the heck's going on with the healthcare markets. And Paul LoNigro is the owner of Group Insurance Analysts, and you can find out more about them by going to e-gia.com, or you can give Paul a call, 303-423-0162. However, if you'd like to join the program right now, if you got any questions, 303-477-5600 is the number to call in. Okay, Paul, so I got this question submitted to me earlier, and evidently the person works for a company. He's got company health insurance. And now I guess it's through United Health Plans. And evidently United Health Plans is changing their coverage, and so now the company is considering dropping United Health and going to somebody else. What options are available to this employee? Does this employee have to go along with whatever the company does, or is this one of those you call life type changing events to where now he can go off into the other markets and see what's available to him?
Well, that's a good question, and there's a couple things that need to be addressed. In that, if the insurance company that they switch to, let's say they go from United Healthcare, let's say they go to a different insurance company, one of the things he needs to understand is that if he's used any part of his deductible so far this year before making the change, that will transfer over to the new plan. So he won't have to meet that again.
That's good.
So he needs to he needs to understand that, because if he goes off on his own, I mean, he could, yes, that would be a life change event, and he could opt out and go buy a plan on his own. But if he does that, he's going to be faced with a number of negative items. Number one is the plans that he goes to buy on his own. The Obamacare plans, in essence, are probably going to have smaller networks than what he has offered right now through United or whoever they go with, because the group plans have much stronger network options than the individual plans. But the biggest thing is this, is that because he has access...
Hold on. I just need to go back and clarify one thing. So that potentially means his costs could go up substantially.
That's correct.
Okay.
So you need to be very careful on that. And the second thing is that because he has access to his employer's plan, that is going to most likely knock him out of getting any type of subsidy. So if he qualified for a subsidy by income, let's say he's under that 400% of the federal poverty level, he would still not get the subsidy because he has access to the group plan. And, of course, if he's over the 400%, he gets no subsidy, and he's going to pay more because the individual plans are priced higher than the group plan. So my feeling would be that he would not do better going off on his own than staying with his company's plan, even if they switch.
Ha! This also poses another question for me that I didn't know before. So if you are working for somebody that offers health insurance through their business that you work for, then when you go, if you decide, that plan stinks on ice, I don't want that plan, and you want to go off on your own, because the company offers a plan, even though you could be under those federal poverty lines, you may not be eligible for the subsidy.
That's correct, and that's something a lot of people don't realize until it's too late. They don't realize it until they file their tax return, and especially if they go do it on their own and don't use a broker like us or another agent or someone who understands this, they may go and start filling out that form online, and they put the income in, and maybe they get to the question about employers' health insurance through the employer, and they check no. and then what happens is they get a subsidy, but then when they do their taxes the next year, they find out they didn't qualify for it, and they owe the subsidy back.
Holy
cow. So you got to be careful.
Holy cow. That could cause a whole bunch of problems right there.
And it does, because the other thing that happens quite often is this. Someone works for the company and they take the insurance plan for themselves, but they don't take it for their wife or spouse and their children, because the amount extra that they have to pay they think is too much. So they send the spouse and the children to the exchange to Connect for Health to buy a plan on their own, and then they see that they qualify for a subsidy, and they take the subsidy and they think they have a good deal. Well, once again, it goes back to that rule. If the employee has access to that employer's plan, even the dependents don't have the ability to get that subsidy. So once again, they take the subsidy, and then they file their tax return the next year, and they owe it back.
Holy cow. Okay, so let me ask you this. Could this affect, okay, let's say you're husband and wife, and let's say that the husband's been working and they've been going through you guys for health insurance. So obviously they're in the private markets. Now let's say wifey gets a job where all of a sudden now there's these benefits available. What happens in that case if they decide not to take the benefit, or if she decides just to go on that company plan and the rest of the family stays, going through you guys?
Yeah, what would happen is in most situations they would lose that subsidy, and they would have to, and if they took it, they would have to pay it back when they file their tax return. So that's another reason why you want to use someone that understands this.
Okay, but let's say, I don't even know to ask the question. Let's say I don't even know to ask you or Austin the question. Let's just, because luckily this hasn't happened to me yet, but it could easily have happened, and I would have not even known to ask the question.
Yes, and in fact, the brokers here are trained to look for that. So for example, if you called Austin and said, "I need to take my wife off the plan, she just got a job," the first thing Austin would be thinking about is, so your wife's employer has group coverage, and she's going on that plan, and he would ask, can your wife add you and your children to her plan? Does she have that option? That's the first question we would be asking. And generally the answer is yes. Even though the employer might not pay that premium, the answer is still yes. And as long as she has the option of putting you and the children on their plan, then we'd come back and say, Dan, that means you're not going to get the subsidy any longer.
And I'll tell you what, that subsidy could either make or break you. So if the situation does come up, now once again, I just want to clarify this. So once again, if the situation does come up, the wife gets a new full-time job, she's eligible for benefits. Now, let's say she declines the benefits because we like the plan, or the family likes the plan they're on now, they could lose the subsidy. Is that correct?
Yes, they could lose the subsidy. The only way you could keep the subsidy is if the amount of premium that she would have to pay through the employer is deemed unaffordable. Okay, so the portion that she pays would have to be deemed unaffordable, and there's a formula for that.
Okay.
And so we would look at what her let's say what her W-2 earnings are, and we would ask her, how much are you paying for yourself for that premium, because the employer is going to kick in some as well. And we're going to take that figure, that amount that you're paying out of your paycheck every week or every 2 weeks, and we're going to do a calculation to see if it's deemed affordable or not. And if it's deemed affordable, you lose all subsidies. If it's deemed unaffordable, then you can still get the subsidy. But for it to be deemed unaffordable, it basically means the employer is paying either very little or no part of that premium, and that's usually pretty rare.
Paul, this is exactly why I just hate all of this. I can't We're supposed to be a free people. Get rid of the subsidies. Get the government out of healthcare. Just, my gosh, turn it back over to us so we can manage this thing the way it's supposed to be. It just drives me nuts. Okay, Paul, we got one more segment coming up. And I tell you what, the average guy out there walking around does not know any of this. If you have any questions on healthcare, health insurance, please give Paul a call. GIA 303-423-0162. Dan Meurer in for Scott Watley. We'll be right back.
Don't fall for gimmick ads when choosing your insurance coverage. Group Insurance Analysts has been Colorado's insurance superstore since 1984, where customers can compare and shop for all of their insurance needs. At GIA Insurance, their brokers have no allegiance to any particular health, auto, or home insurance company. Take advantage of their experience, expertise, and exceptional client service. For your free quote, call today at 303-423-0162. That's 303-423-0162. Visit their website, e-gia.com, or stop by their office at 44th and Garrison Street in Wheat Ridge. Group Insurance Analysts is an official Haystack Help registered company.
Hi, this is Scott Watley. Let me tell you what I love about Stack Optical. They are truly one of the last optician-owned, family-owned optical stores. At Stack Optical, you can be confident you'll receive personal attention. For over 50 years, Alan Stack has shown he really cares about making his customers happy. Stack Optical also has a beautiful new location at 2233 South Monaco Parkway in Denver. Free and easy up-close parking. Stack Optical has an on-site eyeglass production lab. Whether you need office eyewear or a new set of shooting or golf glasses, Stack Optical has the solution with the Stack Sport Pack. Give them a call today and ask for their $69 eye exam, 303-321-1578. That's 303-321-1578. Your eyes and vision are one of the most important things in life. I'm confident at Stack Optical, you'll see the difference. That's 303-321-1578, stackoptical.com.
If you have questions about inheritance or beneficiaries and how it affects your retirement planning, Dot Mechtenberg can help you. Discuss your legacy wishes with Dot. She can help guide you through these crucial issues. Call Dot Mechtenberg today at 303-940-7807. That's 303-940-7807, or visit dotmechtenberg.com. Securities and advisory services offered through Genios Wealth Management Incorporated, member FINRA SIPC.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
Ooh, psychedelic. I like it. All right, welcome back to Haystack Help Radio. Dan Meurer in for Mr. Scott Watley, who's out literally getting the bacon as we speak. And hey, for any of the services or sponsors and stuff like that Haystack Help provides, you can go to haystackhelp.com and you look up just about anything. I'm on the website right now. It's pretty incredible. And Scott's got a great list of resources here for you. And just about anything you could possibly imagine is on haystackhelp.com. But right now we're talking insurance with the owner of Group Insurance Analysts, Paul LoNigro. And you can get a hold of Paul at GIA by going to e-gia.com or 303-423-0162. Okay, Paul. What the heck were we thinking, man? I mean, what have we done to health insurance? I mean, this is absurd. I almost wanted Charlie to play the Soviet national anthem as we came in, because that's what I feel like with these subsidies, with all these rules and regulations. I mean, who's like the health insurance czar standing there going, "Well, now you get this and you don't get that." I mean, this is ludicrous.
Yeah, I agree. Could you imagine what it would be like if we regulated our auto insurance and homeowners insurance in the same way?
Oh, brother, no. I can't. I mean, just think about what we talked about last segment. Somebody does just a simple act of getting a full-time job with benefits. Come tax time, they could be literally totally screwed. I mean, seriously, big time.
Yes, that's correct. And you know what Obamacare does, and you mentioned it in the last segment, is that because of the subsidies, there's really no incentive for anyone to bring costs down. Okay, because this whole thing is driven by medical costs. I mean, let's you call it the way it is. It's the cost for the hospital stays and prescription drugs and so forth. That's 80 to 85% of your premium, and so we're not fostering competition among the medical providers. We're not fostering competition among the insurance companies. We're basically saying, charge that premium, and the government, which is the taxpayer, is going to subsidize that premium for those people who qualify for it. And in the real world, I mean, in real capitalistic society, we should be generating competition among the drug companies and among the hospitals and the medical providers and the insurance companies to get the best possible product and service at the best possible cost. Just like, you go to King Soopers and all of a sudden all the competition's gone. Albertsons leaves and Safeway leaves, and they're the only ones there. King Soopers rate goes through the roof. Oh, yeah. Now all of a sudden Walmart moves in and their prices come back down.
Exactly.
Okay.
That's well, first of all, it's human nature. It's markets. It's supply and demand. It's monopolies. That's why, we try to prevent, monopolies. We try to encourage competition. But the government has really turned health insurance into a monopoly of sorts where they control it.
Yes. And prior to Obamacare, which we were talking about earlier, we had a system where the insurance companies could develop policies. And we developed policies based on different demographics. So we weren't telling people who were in their 20s they had to buy a policy that was designed for someone in their 60s and vice versa. We actually had products designed for different demographic groups based on experience and income and other factors, which we can't do any longer. And we did risk assessments on applicants so that you could not wait until you had a cancer claim or a heart attack to buy the insurance. You had to buy it before those things happened. And if you did wait and you could not buy a policy, we had a risk pool. I think that's the big thing that we're missing now, where we could have kept the system the way it was. We had the Colorado high risk pool for individuals who could not get insurance. The premiums for people in there were subsidized, so we were still doing some subsidizing, but we were doing far less.
Yeah, and
than we're doing today.
And Paul, even a right wing conservative, Republican guy like me, I didn't have much of a problem with that. I just really didn't, help those out that really can't help themselves. They're just, there's just no way that the private market can help them. And I had no problem with that. The only other thing I just want to bring up real quick is that, there was a reason why that the American people were like saying, we need to do something, we need to change, something needs to happen, and it's because even prior to Obamacare, the government was getting their hands. They were meddling in this thing with all these unnecessary mandates. They would disguise it as, well, we just want to make sure we're helping those out that need to be covered for these things. But in reality, what they were doing, I feel, is that they were driving the rates up so that there would be an outcry, so that the populace would cry, we need to do something to change, which then opened the doors for Obamacare. Am I way off on that?
No, you're not way off. And think about this, too, because insurance is regulated at the state level. So when you talk about the government, there's two governments that are affecting health insurance policies, the federal government and the state governments. Now, think about this. An insurance company sells health insurance in 50 different states. They have 50 different sets of regulations. Mm-hmm. Okay, 50 different mandates. Okay, 50 different variances in coverage. Now, what do you think that does to premium?
Oh, it makes it go up.
It goes up. Right.
And not only that, but the state, let's say the state that has, on top of all the federal mandates, which I think are totally unconstitutional, but on top of all the federal mandates, a state with a lot more mandates is probably going to have fewer insurance companies, bidding for your insurance dollars.
Yes, and think about this. I read this week where I believe it's the state of New York wants to mandate that the insurance companies have to pay for sex change operations in the Obamacare plan.
Come on.
Okay. I knew that gets.
Seriously, that's a mandate. You know what? We think everybody out there wants to have a sex change, and so therefore we're going to mandate that the insurance companies cover it. What, are you kidding me?
Which means the policyholders pay for it in their premiums.
That means just the average working guy is out there thinking, great, I get to pay for that nut job sex change operation.
Right, exactly. Then I believe it was the state of New Jersey wants to mandate coverage for fertilization, for treatments, for like in vitro fertilization and so forth. Once again, it's a very expensive procedure, and it's not used by a lot of people, but it's very expensive, and then you raise premiums on everybody else to pay for that. And those are two examples, and they're not far out examples. They're examples that are happening, and that's got to stop.
No, that's got to stop. Okay, Paul, let's wrap this thing up by once again going over all the other different insurances that you guys have out there. Because a lot of people probably have a company plan or whatever, but what other services do you guys provide over there as far as insurance?
Yes, because, really Obamacare plans are a small part of what we do. We work with businesses for their group health plans, their employee benefits, their commercial insurance, workers' comp, business liability, commercial property. We're very big in personal lines for home and auto insurance. We have a huge unit that handles Medicare plans. For the reason you talked about this whole show, people are so confused about Medicare that they're looking for someone to help them. We do a lot of business in Medicare. And then we also handle, your standard insurances like life insurance and dental and disability, long-term care. I mean, any type of insurance out there, we handle it. We're independent, so we do shop rates, benefits, policies for many different insurance companies. We're Colorado-based. We have an online presence. You can call us. You can visit us. And that's something that a lot of our competitors don't do anymore.
No, and I'll tell you what, your office is a showpiece. I mean, it is fantastic. Not only that, if you say the right magic words, there's usually some really good food hiding in the back somewhere.
There's always food here.
I love that part. So, Paul, hey, you know what? Thanks again. And if Austin has to deal with me again, if you end up having to cover that bar tab, let me know, and I'll get you covered on that, all right?
All right. Thank you, Dan.
All right, Paul. Thanks again. Okay, that's Paul LoNigro, Group Insurance Analyst, 303-423-0162. Dan Meurer for Scott Watley. See you guys on Rush to Reason later this afternoon.
The views and opinions expressed on KLZ 560 are those of the speaker and do not necessarily reflect those of Crawford Broadcasting, the station, management, employees, associates, or advertisers. KLZ 560 is a Crawford Broadcasting God and Country station.